Hedge fund manager Kyle Bass reported early this morning that the Bank of Jinzhou has failed. So, if you check the mainstream financial media in the United States, there was reports over the last week to 10 days that the bank was trying to raise more capital from investors, creditors, and Bloomberg also reported in the last couple days that the Bank of Jinzhou had a really bad dollar-denominated debt problem and they were trying to get a liquidity infusion. So I'm going to read Kyle Bass's tweet. His Twitter is a good follow now. It's very spicy. So he says, China banking crisis alert. Reports are circulating that the Bank of Jinzhou has failed. There are almost 500 banks in China that are labeled troubled by government itself. First, Baoshang bifurcated the interbank market, and now the other banks begin to fall. So there was a great Zero Hedge article that came out exactly a week ago. It was last Friday. And it went into very good detail explaining these things. If you're not very financially sophisticated, there are terms that you probably have to look up, but the main gist of the article is that the banks and financial institutions that are non-banking, so money management companies, which have borrowed money as well in the shadow banking system and from banks, that counterparties of all different sizes no longer trust each other, which means that they are demanding more and more collateral, and they are demanding higher quality collateral. And this is the type of setup that happened to banks in the U.S. over 2 years, 3 years approximately, and it just kept going worse and worse and worse over that period. So let me talk about the size of Bank of Jinzhou. So they have approximately $100 billion in assets, and Zero Hedge put out an article yesterday on Thursday with a chart that they've been showing about the sizes of the local Chinese banks, not the big four, but the Bank of Jinzhou is one of the larger local banks that's not considered one of the big four. And it's considerably larger, significantly larger than Baoshang Bank. But Baoshang Bank was not a big bank. Michael Pinto wrote an excellent article pretty soon after Baoshang Bank, the incident happened. And Michael Pinto compared Baoshang Bank to IndyMac Bank, which was one of the first mortgage derivative banks to fail that was specializing in home mortgages, that was taking on extra risk with subprime and other stuff. I think they failed in 2006 or 2007. So Michael Pinto was comparing it to that size. I looked up for you guys the size of Washington Mutual and also Wachovia. Now, Wachovia was eventually bought for $1 per share by Wells Fargo. I think the U.S. government and the regulators and the Fed forced a merger there. But Wachovia's balance sheet had $553 billion in assets, and they did a really dumb acquisition of Golden West Mortgage, and that portfolio had a lot of garbage in it, including option adjustable rate mortgages and other garbage in there. And the comparison, though, I would say for Bank of Jinzhou is probably closer to Washington Mutual Bank, because Washington Mutual Bank had, around the time that I believe it suddenly failed without warning. At the end of June 2008, I have this article up here from a financial education dictionary, and they had claimed $307 billion worth of assets. So I would say that it's more likely that Bank of Jinzhou is similar in comparison to Washington Mutual, if you want to compare it to anything in the American banking system. And a lot of people expected the Chinese banking regulators, financial industry regulators, the People's Bank of China, which is their central bank, to do full bailouts. And it is clear that they are not. And the main thing, besides other risky bets and loans that got the Bank of Jinzhou in trouble, was dollar-denominated debt. Too much dollar-denominated debt. And here we are with the dollar index has not fallen. You have all these foreign banks and these foreign governments and these foreign corporations that borrowed dollars thinking that their currency would appreciate and the dollar would be devalued, and the dollar index is almost back at 98. I think it was at 98 earlier today, and it's back down to 97.90, and the trade-weighted dollar is strong as well. It has not had a big correction. So these bankers, because they thought that they could bet that the dollar would weaken, they would have temporarily be able to pay lower interest rates, but they were taking enormous currency risk. And this is the situation with the Bank of Jinzhou. I have articles if you want to go into this in more detail, but the timeline though for the Bank of Jinzhou, I talked about this in the last couple months. So almost 2 months ago, about almost exactly 2 months ago, you had Baoshang Bank. And that had not happened in 30 years, officially publicly announced Chinese bank failure. And pretty shortly after that, there was an emergency liquidity program announced by the People's Bank of China. They stated it 70 billion, but who knows the real number? It was a press release. And then the head of the People's Bank of China, a couple weeks after that, did an interview on Bloomberg saying, we're fine, everything's fine. But about 10 days, I think it was less than 2 weeks after the announcement that the Baoshang Bank was being taken over, and everyone said it was small. All the China bulls were saying it's no big deal. And I was warning people that this is just the beginning, okay? Because there's going to be contagion. There's going to be counterparty risk. These bankers, these money management firms that have a leveraged balance sheets and counterparty risk, they're going to stop trusting each other. And we're seeing this play out. It's playing out now. It's not to the scale yet of the problems in the European banking system, not yet. It's not to the scale yet of the problems that happened prior to the 2008 housing bubble. So we don't have the banks yet the size of Citibank or Bear Stearns or Lehman Brothers. You know, banks that are absolutely enormous that need bailouts or whatever. They're not to that size yet, but things are heading that direction now in China. I looked up on a Chinese-speaking website for that. So that's a flashcard, I think. So I'm not sure if it's right or not, but the fluent Mandarin and Cantonese speakers will tell me. So it's taken 2 months, and 2 months that the People's Bank of China has claimed that things were under control, and we're seeing evidence that it's not. The other thing I forgot to mention on that timeline, because I'm doing this without notes, this is just off the cuff, this is just going to be a short update for you guys, is that around, I think, less than 14 days after Baoshang Bank, we got some news from the Bank of Jinzhou, and a lot of people were downplaying it. So the auditors of the bank, this is a private accounting company. It's like a branch of one of the big 4 or big 5 accounting firms. It's a Chinese branch. They resigned as auditors of the bank because they said that the bank would not hand over the proper accounting documents so they could account for loans and other things. So this, guys, is normally an enormous red flag. So if a entity, a business, or someone like Bernie Madoff is going auditor shopping, or if a very well-respected accounting firm resigns, normally there's problems coming down the line, and the auditor, the accounting firm, especially if they're a big firm, does not want to get sued, does not want to get blamed, they want out. So I was talking about this within 2 weeks after Baoshang Bank, and here we are less than 2 months later, and it looks like that another bank that is now larger than Baoshang Bank has failed. So things are going to get worse before they get better, unfortunately. Look, I'm not rooting for China to fail, but they have misallocated trillions of dollars in capital. People are saying that I'm politically biased, that I'm not being objective. I'm just reporting news stories. I criticize every single government. The European Union's doing an absolutely horrible job. The United States government's doing a horrible job. I was ranting and bashing the Fed yesterday. I've had conversations off the record with former Federal Reserve employees, a few current ones too. The lower level people, guys, they have no effing clue what is really going on. They drink the Kool-Aid. They routinely drink the Kool-Aid. They believe in their math, their formulas. They believe in all the government economic data. They believe it all. So the Fed hires people that are true believers. That, and almost all of them, I haven't met a Fed person who isn't a hardcore Democrat. There may be a few Republicans. I think Bernanke was a Republican initially, but he may have switched. But they specifically screen mostly Ivy League people, especially at the higher positions. And it's a certain type of political bias. There is a lot of fraud in China, but there also is a lot of fraud in the European Union and the United States. There's fraud everywhere. It's caveat emptor. It is buyer beware. So I have, let me see here. I have quite a few articles for you guys if you want to read up on this. 1, 2, 3, 4, 5. I have 5 different articles if you want to read up on this, and then I'll also put in the article from last week, which I think is important, about how the interbank lending rate, which if you don't want to get all sophisticated, it basically just means that these banks do not trust each other anymore. So if you're a smaller bank and you're trying to borrow from other banks that are larger, or a larger state-owned enterprise bank, one of the big 4 in China, they do not trust you anymore after the Baoshang bank failure and the 30% haircut that the creditors were not supposed to get on Baoshang Bank. The creditors of Baoshang Bank were not supposed to get. So things are ramping up in China, and the China bulls are saying that it's not true, that all these other governments are worse. China has made a lot of mistakes the last 10 years, and they are on par with mistakes, in my opinion, with Japan. They are on par with mistakes with the European Union, and they are on par with the mistakes with the United States. Their banking failures are not to the scale yet, but we don't know their derivatives positions. We just know what's stated right now with their assets. So Bank of Jinzhou has around $100 billion in assets. It is significantly larger than Baoshang Bank, which was the first to fail. I routinely criticize America. Bye-bye. I knew that guy was a troll. I knew he would come back. It's just really sad. He had a Western screen name too. So either he's doing it for free as a useful idiot and he's brainwashed, or he's getting paid to do it. I don't agree. Look, I really respect Kyle Bass. I think he is one of the smartest people in finance, along with David Einhorn. David Einhorn is one of my favorites. They're not always right. They do make mistakes, but they do incredible amounts of research. If you knew the research, I've heard of some of the research that Kyle Bass and his employees do. If you heard the research that he does, you'd be very impressed. And the sources of information, and also the prices that he pays for information. I've heard some of the prices of some of these well-researched boots on the ground China newsletters. They are very expensive. One of them, from what I've heard, is over $30,000 per year. I'm not familiar with Kyle Bass's short positions in Australia. Hey Jack, I really appreciate the kind words. The best economic news channel right now. Hey man, I've tried. I've tried to be more balanced than the other guys. I'm not making $87,000 per ounce gold predictions. I think gold and silver going higher eventually. I don't know about $87,000, but I'm trying to give you guys more rational and reasonable analysis. I'm just trying here. I'm doing the best I can with the very, very limited resources that I have. I thought for sure that I would have studio equipment, that I would have raised enough money from my educational technology company, that I would have be able to invest in the studio and have an office space and have a couple part-time or full-time employees, and maybe even have raised money for a hedge fund for myself, because I think I know more than most hedge fund managers out there. A lot of these hedge fund guys, unfortunately, are robots. They are copycats. A lot of them lack any and all independent thinking. Because as a hedge fund manager and a professional money manager, if you take too many risks, if you stick your neck out, you're risking your career. So that's why a lot of these guys won't do it. Okay, well, that's enough for this brief update. Just wanted to talk about the Bank of Jinzhou. And I would expect that there would be, over the next couple months, probably more failures. It looks to me like this is just the beginning, and the Bloomberg article, which is, unless you have, I think they're only giving 10 free articles now per month. It's 10 free articles total or 10 free per month. I think it's 10 free total because they want you to pay. But they're reporting, Bloomberg is reporting that one of the main reasons that the Bank of Jinzhou failed was that they had dollar-denominated debt problems. So this dollar rally, the dollar not getting weaker, has caused tremendous problems already in the Chinese banking system. And we'll have to see what happens. One of my friends was texting me and asking me if things get bad enough in China, if China will want currency swaps from the Federal Reserve. And I said, you know what, man? Nothing surprises me anymore. I'm not predicting for sure that it would happen, but you never know. And my educated guess is that the Federal Reserve could already have currency swap lines open with Canada and Australia, because I think things are getting very, very bad there, especially in Australia with their housing market. And Canada has problems in their credit card market, their mortgage, home equity market. They're having a lot of problems there too. Although I think Australia is ahead of them in problems right now. My friend Diana, who's a longtime listener of the show, she sends me all these Australian articles. Sounds like a lot of bad things are happening beneath the surface in Australia that the mainstream media in Australia will not cover. It's really sad. And that's why people are coming here to YouTube and looking for alternative sources of information. Hopefully more people will wake up. But I'm not anti-China. I actually was a very big China bull. But unfortunately, I've heard all these stories of fraud. So I was hoping, cautiously optimistic, that China would be better than the United States with less fraud and would focus on more entrepreneurship. But the more stories I hear, especially with the China Hustle documentary, I lost money many years ago. When I was first starting investing, I bought some Chinese companies and they were definitely frauds. Oh wow, $50 super chat. Thank you very much. And guys, I am still working on getting Kyle Bass on here. I heard he's been listening to some of my recent China interviews and some of my China podcasts and getting good feedback there. So I am still working on getting him on, hopefully in less than 6 months. It takes him convincing because this is just a podcast and he can literally do interviews wherever he wants. So I am still trying on that end too. But if you haven't listened yet, I highly recommend going and watching the Denny McMahon interview. Going and listening to the Denny McMahon interview. I think there's lots of good analysis in there. He spent 10 years in China, so he's not a brainwashed Westerner who knows nothing about China. He learned Mandarin, I think, growing up in Australia. And his insights are good. His book's good. So all these governments, the main overarching theme here, all these governments make enormous mistakes. All their central banks, enormous mistakes. And people like us on Main Street, we're left to deal with the consequences. And unfortunately, there's going to be more stagflation, I think, more taxes, more lies. And the worst part of it is the rules changes. Because the average, I've met financial professionals who don't, tons of them, who don't understand anything about anything whatsoever about the rules changes. If you go back through financial history, one of the most common themes throughout financial history, whether it's way back in financial history or modern financial history, World War I up to now, it's that governments always try to change the rules. Always try to change the rules. So if you're all in, and Bill Holter called me a crypto pumper for saying this, but if you're all in on any one thing, if you're all in on rental properties, or all in on physical gold, or all in on physical silver, or all in on stocks, or all in on bonds, or all in on Bitcoin, or all in on cryptos, or all in on marijuana stocks, or all in on regular stocks. I can't remember if I mentioned regular stocks because I'm ranting here, but it is dangerous because the rules can be changed. If the Democrats win the 2020 election, Bernie Sanders is talking about starting and Elizabeth Warren an additional tax on stock trading. Okay? All these politicians suck. Pretty much all of them. Ron Paul's really one of the few ones I like. I like Justin Amash. I think he's pretty good. Thomas Massey is really good. He follows me on Twitter too. I like Thomas Massey. And Rand Paul. There's like a handful. that have any integrity. Very, very few. Tulsi Gabbard is okay on her anti-war stance. Her economics are garbage. She doesn't, I don't think, someone needs to send her a copy of Economics in One Lesson. Someone needs to send her a used copy from Henry Hazlitt. Okay, guys, well, I got another super chat from Team Hunley, so thank you very much. 2 super chats today. So that should be a nice weekend for me. And that's it for this short little update on the video, and I'll put the article links in the information section. That's it for now. I'm going to go watch this baseball game, Dodgers against Nationals. Hopefully it's a good game.